Hello and welcome to my next video in my general accounting series. This one's going to be an example video on retained earnings statements. So let's jump right in. This is going to be a continuation of the previous example. Carla's company, the Magic Fix, has been doing very well for their first year. It's now the end of the month of November, and they have a total of $52,250 retained in the business. Now, during the month of November, the Magic Fix, if we remember from our previous example on income statements, had a net income of $14,750. Also, if we remember from the previous example video, Carla decided to pay out a dividend of $7,000. Now, for those of you who want to pause the video here and try to solve it on your own, go ahead. For those of you who want to listen to my thought process on how to do this example, just continue listening. All right, when I go to create a retained earnings statement, this is obviously after I've already made the income statement. The first number that I look for is basically the net income. And the reason I look for the net income first is because when I've created already the income statement, it's easy to know what my net income is because it's already fresh in your mind. If you've already completed, say, the work for a single problem or the work for a company, it's easy to jump from the income statement to the retained earnings statement because you already have a major part of the retained earnings statement, the net income. So in this example, I try to trick you guys a little bit. Not gonna lie. I put the net income in the middle of the example. So I'm going to search for that first and see that, yes, indeed, my net income is $14,750. So if you guys go to your spreadsheets or whatever you guys are using, you're going to want to mark a place off for the net income, but don't write it in yet. The next that I want to see is if the company has retained earnings, because a lot of times some companies may decide to spend all their retained earnings on something else. Like maybe they want to spend all their money on buying more land or buying different assortments of assets like buildings, office equipment, something to expand their business to grow. Or maybe they didn't have any retained earnings because this is their first month of being in business. Now for Carla, this is not her first month for being in business, and she has not spent all of her retained earnings. So she does have a number that we need to factor in here. And now we have the retained earnings for the previous year, which was $52,250. Okay, so we have two of the major numbers for retained earnings, which is the previous years of retained earnings plus the current net income. Now we have to look at for the final one, the dividend, which is basically, if we remember, dividends are separate from expenses, so they were not counted in the net income. And we all know the reason why dividends weren't counted as expenses is because dividends do not earn us a revenue. Expenses earn us revenues. Dividends are just paid to our owners just for the fact that they're owners. Just we're granting them money because they gave us money to start our business or whatever. So, but thankfully, Carla's the only stockholder, so she's the only one that gets the dividend. Okay, so we have our three numbers, our dividend, our net income, and our retained earnings. So this is how I set it up, okay? I have my retained earnings for October, and now some of you are thinking, now wait a second, isn't that for the whole year, not just for October? Well, I'm assuming here in this example that Carla releases an income statement every month. So for every income statement, like for December's income statement or for December's retained earnings statement, I would say retained earnings for November. It just basically shows that each retained earnings builds on each other, right? So if you're a company like Ford that's been working for 40, 50, 70 years, each month, each day, each time you sell a car, that amount of money that you retain in your business from that car resides in your business. And it doesn't matter if it was the first Ford model or the new Ford F-150 or whatever. That money is still retained in the business. It's always going to be retained in the business unless you spend it. And that's just easily shown by saying the previous month. So for any business, you're either going to say, oh, well, I know it's the year 2014, but we only release an income statement every year, so last retained earnings we had was 2013. So just the last retained earnings statement you have, use that one. And that's going to be your retained earnings for whatever the last one is. So we have our retained earnings for October, and I'm putting that in line 1 because that's our starting point. If you remember, we always want to start with what we already have. So this is her nest egg already, and we're growing that nest egg. We're growing that. So then we add in what we're giving to this nest egg first. We first give it what we can, and then we're going to take away the dividends. So we give it that $14,750. We give it that net income for the month of November, and it's very important, remember, to say what month that net income is. So when you make your own retained earnings statement, you have to make sure that you're being very specific. You're saying it's for the retained earnings are from the previous month, and the net income is for the month that we're in right now. It doesn't matter if the month is April, August, September. It doesn't matter what the month is, as long as you have that month in your retained earnings statement for yourself. Now, some of you may not have done this, but I decided to do this just for my own purposes. You don't necessarily need this, but I myself decided to do this. I decided to add a total of what the net income and retained earnings, when you add those together, I decided to add that in there just for myself, just to look over there and be like, because I know if I was looking at this as a manager for a company or an investor, I don't necessarily care what the retained earnings are for October. I don't necessarily care what my net income was. I want to know what I'm subtracting my dividends from. I want to know what that total amount is. Okay, now it's not wrong if you want to put in your, if you don't want to put in your total at all. It's not wrong. But I decided to do that. The next one is dividends. All right, so you have your 67,000, minus your 7,000, and that gets you your 60,000. Now, some of you are going to be like, why aren't these indented? On the income statement, you had indented words. Well, frankly, these aren't indented because they're all the same level of generalization. Okay, so they're all as specific as you can get. Like dividends, you're not going to say, well, we paid this amount of dividends for this kind of stock. No, you pay the same amount of dividends for all kind of stock. And for net income, well, you're not going to say for the first week of November we had this level of net income. That would be outrageous. It's better just to say this is the net income for the entire October, or for the entire November. This is our net income. And you're not going to go into retained earnings for October and be like, this is our retained earnings for August, September, yada, yada, yada. That's just too much information for one retained earnings. It's better just to say all these are the same level of generalization, and that's why they're not indented. All right, so thank you all very much for watching this video. If you guys have any questions on retained earnings statements, please general message me or leave a comment. Thank you all very much for your time, and see you all next time.